Well, hello there, and welcome to another episode of Real Estate Investing with Jay Conner. I'm Jay Conner, your host, and also known as the Private Money Authority. If you're brand new here to listening on iTunes or Google Play, or you may be watching and listening to the live stream right now on one of our YouTube channels or Facebook, and you're new to Real Estate Investing with Jay Conner's show, we talk about all things real estate, how to find deals, how to get them funded, how to sell them fast, how to automate your business so you're actually running your business and it's not running you. And since we launched the show back in June of 2018, I've had some very, very amazing guests here on the show with me. And today is no different. But before I bring my guest on, I want to let you know about one big thing that we do here on the show, and that's talking about funding for your deals. Well, the short version of my story is my wife, Carol Joy, and I started investing in single family houses here in Eastern North Carolina back in 2003. And the first 6 years that we were doing business, I relied on the local banks and mortgage companies. But in January 2009, I was cut off from my funding with no notice like the rest of the world. And so I was introduced to this wonderful world of private money. How to get funding for your deals that has nothing to do with your credit, nothing to do with your verification of income, nothing to do with your experience, and how you can actually set your own rules to get funding for your real estate deals. So I've been using private money for funding ever since 2009. We've got 49 private lenders right now funding our deals. And if you would like to learn as well about how you can get funding for your deals the same way I do without relying on banks, then I've got a free online class for you to check out after the show. Get on over after the show to www.jayconner.com/money podcast. That's jayconner, jayconner.com/money podcast. There I will teach you and reveal the 5 easy steps as to how you can quickly have zero funding for your deals and very quickly having the hundreds of thousands and millions of dollars in funding. So with that, I'm just so excited to introduce to you my guest today. My guest is a CPA and a real estate investor. You don't find too many of those combinations inside the same head. So anyway, he implements this thing called the BRRRR investing strategy, and we're going to dive deep on that and find out what in the world that strategy is. So he primarily focuses on small apartments and commercial deals. Now, he has got a very, very popular YouTube channel that right now has over 60,000 subscribers. And we're going to tell you here in a moment how to get over to that YouTube channel, and you can check him out. But on his YouTube channel, he teaches you how to analyze multifamily properties and how to maximize your return on investment through strategic innovations and renovations that will allow you to increase your rents, increase your equity, and how to increase very quickly your cash flow in these properties. And on this same YouTube channel, you'll find videos where he's teaching that's ranging from renovating properties, duplexes, triplexes of all sizes, as well as dealing with student rentals, his best practices for buying properties, how to manage your tenants, and your portfolio of properties. So he's also going to show you on his YouTube channel how he structures joint venture deals, how he gets funding for his deals, how he negotiates with banks, refinances properties, and of course, much more. So be sure to subscribe to his channel when we tell you about it here in a moment, and you'll be able to follow him in his pursuit of financial independence and how you can get it also as well. With that, I'm so excited to bring onto the show right now, Mr. Matt McKeever. Hello, Matt, and welcome to the show, my friend.
Thanks, Jay. Appreciate the warm introduction.
Absolutely. Glad to hear you. So you're up in Canada. Well, whereabouts in Canada?
So located London, Ontario, about 2 hours from Toronto, which is our big city here in Canada.
I got you. Now, is all of your investing these days taking place in Canada?
Yep. So right now my portfolio is exclusively in southwestern Ontario. So within right now, actually, it's pretty much all clustered in London, Ontario, which is a market with a 500,000 metro population area, just to kind of give you guys a rough idea. median house price is around 350 to 400.
So with everything that we're going to be talking about here on the show today, and also on your YouTube channel, do all or most of the strategies apply to doing this type of business the way you do it in the United States?
Yeah, absolutely. So if anything, the United States has maybe more friendly investor regulations in most states. So everything we do here in Canada can absolutely be replicated in the States. And in fact, sometimes it's easier because you guys have nifty little tricks like the 1031 exchange, which is completely non-existent here in Canada.
I got you. And that comes into play more often in the world of commercial than it does in single family homes, right?
Absolutely. So here in Canada, unfortunately, we don't have that 1031 exchange. We can find a handful of other innovative ways to try and, help us speed up the velocity of our money. But really for myself, when I first joined, like a lot of investors, my biggest thing was I had a limited amount of resources, right? A limited amount of my own money. And like a lot of people, I hadn't discovered private money like yourself. So we're constantly focused on how can I stretch the little bit of money I have to control the most amount of real estate as possible. And that's what really led me into that BRRRR investment strategy, where you buy a property, renovate it, fix it up, bring it up to its highest, best, most efficient use, then re-rent it out at a higher amount, then go back to your lender and refinance and pull out the money. And I started originally doing that on small single family homes and small multifamilies. And now I've just graduated to doing the exact same business model, but just with small apartment buildings rather than like a triplex or a fourplex.
I got you. Well, just in case some people aren't able to stay to the end of the show, let's go ahead and let everybody know right now how they can find your YouTube channel that's got all the trainings on it and et cetera. Where can they go for that?
Yeah, so if you hit me up on YouTube, it's just Matt McKeever. That's McKeever. And anywhere social media is, you'll find me on those platforms. So if you're not on YouTube, I'm everywhere else as well.
Well, what I want us to talk about, well, thank you for sharing that, Matt. What I want us to talk about today here on the show are really three topics. First, I want to hear about your personal journey in real estate. Secondly, I want you to talk about the power of social media and how you use social media to leverage success in your business. And then thirdly, you got an interesting concept that you talk about. You don't talk that much about ROI, return on investment, or return on cash. You talk about this thing called return on time. So those are the three topics. Let's start with your personal journey, Matt, and your story.
Absolutely. So like a lot of real estate investors, my gateway into real estate investing, the gateway drug, as I like to say it, rich dad, poor dad. That's what really started my entire journey. And in my fourth year at university, I was going through for business. I was going to get my CPA license. And really, the reason I wanted to get into business or become an entrepreneur was to, get rich, like a lot of people. But I didn't really know what get rich meant and had no idea how to actually achieve it. And so I was speaking with one of my roommates at the time. We lived in a 6-bedroom student rental house. And I was like, Jake, your dad's rich. He owns like a big company with hundreds of employees. I was like, go ask him how we get rich, because we both know we want to get rich, but we have no idea. And he actually gave us the book, Rich Dad, Poor Dad. And ever since reading that book, in the back of it, it had a list of other books to go read. I went and read every book from that as well, and just really got addicted to this idea of real estate investing and being able to build up a, passive cash flowing investment portfolio. I didn't end up jumping into real estate until age 25. So from kind of 2021 discovering real estate to 25 and actually executing it, I was just consuming information, trying to save up money, but also I was trying to get outside my comfort zone because all my friends and family thought I was crazy for wanting to get into real estate investing when I was already on, the corporate path to that white collar job with the corner office. At the age of 25 is when I bought my first rental property. And on my 25th birthday, I ended up making a commitment to myself. So I downloaded an app on my phone that would count down the days till my 35th birthday. And I decided to make a commitment that I would retire by the age of 35 because of real estate investing. And so I was the guy at different parties or networking events. People would say, hey, Matt, what's new with you? What's up? I'd pull out the phone and be like, 2,465 days until my 35th birthday when I get to retire. Long story short, kept buying real estate, kept investing in it. And instead of having to wait 10 years, I actually retired from being a CPA, a chartered accountant, at the age of 31 and just went all into real estate investing at that point. And then from that, I found like a lot of people, once I left the corporate 9 to 5 behind, my success in real estate actually really started hockey sticking because I had all this extra time and energy now to deploy into my real estate investing business. And in that first year of quitting my day job, I think I acquired 32 additional units that year, and then have continued just to, focus on different unique investment opportunities, started teaching other people about real estate investing as well. Because when I quit my day job at 31, I found it's kind of lonely. There's not a lot of other 31-year-old retirees out there. And so I didn't really have a peer group to hang out with. So I decided to start writing these really long emails to my friends, like 5,000 word emails, trying to explain to them how they could quit their day job in 5 years if they would just invest in real estate like I did. And I'm sure, as you can imagine, and your audience can imagine, no one responded to those 5,000 word emails because that's a small novella. Thankfully, at the time, I happened to be reading a book, and the book said, speak to your audience in the language they wish to be spoken to. And immediately clicked for me. The reason that I love real estate and the reason so many people are drawn to real estate investing is because it's such a tactical, real investment, right? Like it's a physical thing, unlike, say, paper stock or paper assets. So immediately started documenting on my YouTube channel just how I was going about investing in real estate. So if you go back to like my very first video, you can see I was still swinging a hammer, like I was still sweating up in the attics, re-insulating, running ductwork, stuff like that. So really have been exposed to almost every aspect of the real estate investing journey. But at this point now, what the day-to-day looks like is I've got a wholesaling business with 5 full-time employees just wholesaling real estate. I've got a company that just BRRRRs apartment buildings. So in the last 8 months or so, we've acquired about 70 units in that entity and have just been BRRRRing those apartments. And then also have my education and just networking, which is, my YouTube channel, social media presence, and a couple other little education companies. So definitely just, constantly trying to level up and surround myself with like-minded individuals when it comes to real estate.
Now, you just said that particular entity, you've been BRRRRing properties. First of all, how do you spell that? Secondly, what does it mean?
Absolutely. So BRRRR, BRRRR. And so it stands for buy, renovate, rent, refinance, and repeat. And so really what that looks like is simply finding, to me, the best way to explain is you're just looking for underutilized assets and you're going to try and bring them up to their highest, best, most efficient use. So oftentimes what that looks like for me these days is we're buying an apartment building here in Ontario that maybe is being rented out for 50% of fair market value. And the landlords owned it for 10, 20 years. They're sitting on a lot of equity and they're no longer motivated to operate it at 100% efficiency or anywhere close to it. They're often approaching retirement age. So we go in there, buy the property, then we implement strategic renovations, which again, unlike, on HGTV, a lot of my YouTube fans would love to see me blowing out walls, doing open concept, this, that, and the other. But most of my renovations are really boring. It's like, let's clean out all the junk, let's paint the property, and maybe we'll put in a new kitchen and bathroom tops. And so really, we're just focused on what creates the highest return on investment from those dollars we're investing into the property. So in my market here in London, Ontario specifically, usually adding dishwasher to a kitchen, that can increase not only the rent we can charge every month, but also in general increases the quality of tenant that we're going to be drawing from, as well as, say, adding laundry. If you can put in-suite laundry, oftentimes in my market, I can charge between $100 and $150 more per month in rent, and yet the cost of actually, installing that laundry, depending upon the layout of the unit, might be $2,500. So a very fast payback period in regards to when we can earn back that initial investment. But because we've increased the rent amounts, now the actual capitalization rate of the property, is going to revalue the property at a higher amount as well if we use the same cap rate. So again, what I'm really focused on is just taking underutilized assets, bringing them up to their highest, best, most efficient use, then re-renting them out for top dollar. And once we've re-rented it out for top dollar, our income statement looks a lot more attractive, which means the lender and the appraiser is going to reappraise the property and refinance the property at a much higher value. And ideally, with our business model, if you're doing it right, once you're done this BRRRR, and with the larger apartment buildings, it's usually taking us about 18 months to do it from start to finish. What you're going to end up doing is being able to extract all the initial capital you invested in. So the idea here is, if I can refinance at a 75% loan to value, I maybe buy the property for, let's say, $1 million, put 500,000 in renovations, but then get it to reappraise at 2 million. Well, at a 75% loan to value, I actually will get $1.5 million in new financing, right, from the property, which means I can pay off the entire acquisition cost. So that's really the base model here, is to implement what we call a perfect BRRRR.
I love it. I never heard the BRRRR strategy. I love it. Now, one thing you were just talking about was buying the properties. That's the first letter in the BRRRR strategy. So here in the U.S., there's a popular website called Loopnet. What are some of your favorite strategies these days for locating these these underperforming assets?
Yeah. So there's a lot of different strategies. One thing that is very different about the US market and the Canadian market is, in the US market, you guys have the Freedom of Information Act. Here in Canada, we've got the protection information. So it's literally the exact opposite. So you guys are all about free information. We're all about keeping it all secluded and hidden and private. So honestly, my best way is personal networking. So I'm happy to share some tips here, but it's something that doesn't seem to resonate with a lot of people my age or my generation, which actually makes for a great opportunity for anyone that's willing to actually just build relationships, build rapport. And so we actually target a certain type of realtor even to network with. The realtor I want to network with he's realistically, they're above the age of 55. They've been in business for at least 15 years. And what we're doing is we're approaching those realtors and being like, hey, who have you sold a property to, a large apartment building to 10 years or longer ago? They're sitting on a ton of equity. I want to go make them an offer and make them a ton of money and make that offer through you and have you make commission off of it. So we're very focused on trying to structure win-win opportunities when possible, make sure that everyone eats, because we find when we make sure that everyone else profits from a deal we've done, they get addicted to that cycle and they want to get us more deals. But again, we're very boots on the ground and often focused on doing things that our competition won't do. So everyone loves the idea of hiring a VA out of the Philippines and hitting them hitting the phones for 1,000 calls a day. But what we'll do is I'll literally send one of my employees to stake out an apartment building, and they'll just park in front and literally talk to every person going in that building, being like, who's the owner? Can I get the owner's phone number? And we find that usually, we ask enough, we will get that owner's phone number. And a lot of the apartment buildings I buy are literally through that process of, originally it was myself or a business partner just staking it out. Now we have employees staking out the apartment buildings. But we found that that's the best way to really get deals, because if an owner has already thought about selling a property, contacted a realtor and listed it on the market, they're now focused on just getting top dollar. And if they're solely focused on getting top dollar, that's fine for them, but it's usually not going to work for me and my business model. So we're often focused on not finding sellers, but actually creating sellers by making what we call blind offers. I don't even really know what their motivations are, but I know that they've owned it for so long that they're probably sitting on massive amounts of equity. And so I'm hoping that I can present them with a unique offer that they haven't even really considered. And, then we can get that conversation rolling.
So do you have your people stake out properties that looks just on the outside like it could use, some rehabbing and renovations and really be brought up to increase, rents or whatever? Or do you approach it differently by, again, looking for someone that probably has owned this property for a long time? Which comes first? They've owned it for a long time, or it looks like it could use some renovations, or both?
Yeah, we're definitely open to either. In general, the way we're usually going to again, because we don't have easy databases of information, it can be very cumbersome to really figure out who's owned what property for how long on a grand scale. I can definitely look it up individually, but there's no way for me to like print off, a giant data set. So in general, we're more focused on the building first and then doing our research afterwards. So literally what I'll do, and again, nothing fancy here, but I'll go to my local city's zoning map, look at the zoning, look for high density residential, and then I'll go on Google Satellite and look just from the satellite view and find apartments buildings, right? Identify the apartment buildings, then literally go on Google Street View. Sometimes on Google Street View, you can see the property manager sign on the building. So we'll immediately just call the property management firm then. If we can't find that, that's when I'm probably going to send someone to stake out the building and get in contact with the tenants and find out who manages it and how. But at the same time, we've got a lot of other strategies. So here in Canada, Kijiji is really popular. In the States, I think it's more often Craigslist as the online classifieds that people are going to use. But I also love going on Kijiji, looking through the for rent ads, and you just look for the landlords that are beaten down and they're just sick of it, right? So like there's no good photos taken. And sometimes, I don't know what it's like in the States, but in Canada, you can read it. Like the landlord will write all in caps, like no deadbeats. And that's like the title of their ad. I'm like, this guy doesn't want to be a landlord anymore. This guy wants to sell to me, even if he doesn't know it yet.
I love it. Well, now you said a moment ago something really, really important to the success of your business is networking and relationships. Well, that ties right into how you're able to leverage social media. So would you share with my audience here strategies and tips that you're doing these days to leverage social media and to really how you harness the power of it?
Yeah. And so the first thing I think that we need to really discuss is why even care about social media, right? And I find a lot of investors think that it's simply a distraction. And if you use it as a distraction, it absolutely is. If you use it as a business tool, it absolutely is. So you're right either way. It really just comes down to how you use it. But for me, what's really powerful about social media is having that one-to-many conversation. Before the advent of social media and online networking and things of that nature, realistically, the only one-to-many conversation we could have as real estate investors is going out to your local real estate investment group, right? And you could maybe go, and if you were lucky, you could get up on stage and maybe talk for half an hour, give a little presentation or breakdown about what you're doing. And that group maybe met once a month. So maybe once a year, you could get in their lineup, get up on stage and talk, or you had to become the host of the meetup group in order to have that one-to-many conversation on a recurring basis. Whereas on my YouTube channel, and again, like my YouTube channel isn't massive by YouTube standards, but it's important for what I'm focused on. And what I'm focused on is really talking to my core audience, which is Canadian real estate investors, and then just real estate investors in general. And so even with just like 60,000 subs on my YouTube channel, any given day, I'm averaging 4,000 to 5,000 views on my YouTube channel. The average view on my YouTube channel is about 7 minutes long. So I view that as myself being able to have, 4,000 to 5,000 conversations that are 7 minutes long every single day. Well, that's more minutes than there already is available in a day. So right away, that one-to-many conversation is extremely powerful. But even more so as real estate investors, it's not like we necessarily have to go viral. You don't need millions of followers or millions of views in order to have a very effective business model. You really just need, like, for a lot of real estate investors, their business would be changed if they had 5 good private money partners, right? Or 5 private money lenders. And you can really build up a relationship with those people through social media. So a lot of people, they decide that they want to lend their money to me before I ever even make an ask. And that's simply because they're able to watch and see my projects. They get to see me interact on interviews or go live on Instagram or Facebook and just have conversations. And they get to build a personal relationship with you. And something that we all need to remind ourselves is people like doing business with people they like. And so if you're not putting yourself out there on social media, if you're not trying to present, your story, your image, your business model, you're not giving anyone even the chance to fall in love with you and your story and want to invest in you or your business. So for me, there's just so much power when it comes to social media. But I know I've just been kind of talking high level, so specifics. If any of your listeners here are brand new to social media, they're intimidated by the idea, they don't have a lot of time to invest into social media, pick one platform and spend at least 80% of your social media efforts on that one platform. Now, if you're a small investor and you're looking just to get a couple money partners, or finding, say, 2 or 3 money partners with 6 figures or more to invest would be a game changer, I personally would focus on LinkedIn. I would literally just write 1 or 2 blog posts a week about my business model. Understand that's never going to go viral. You'll probably be lucky to get more than a couple dozen views, but that's all it takes. All you really want to do is really cultivate a strong relationship with a handful of money lenders. Now, for myself, there's value in the education and email lists and all that stuff. But for a lot of beginner real estate investors, you don't need that. You just need to build a handful of relationships. And still, social media is going to be a faster means to that end than going out to your local real estate investing group.
That's awesome. And then to wrap up, Matt, I want us to hang out a few minutes on your view and your take on return on time versus return on instead of ROI, et cetera. So what's your take on return on time and why is that so important?
Yeah, it's something that I think a lot of investors are eluded by at the start. And so in general, I kind of view this evolution of real estate investors and their sophistication based upon the metrics they talk about. So CPA by nature, so kind of a numbers nerd and, a ratio nerd to begin with. But in general, when brand new people come to real estate investing, I find they talk about ROI, return on investment. And they're really impressed by the return on investment real estate can generate. Then once they get a little bit more sophisticated, they really start appreciating and understanding leverage. And we hear them talking about things like cash on cash returns. And really then it's about the velocity of their money. Then as people continue to graduate and evolve as investors, maybe they start looking at larger multifamily properties, at which point in time they usually start talking about cap rates or IRR, the internal rate of return. Again, all these metrics are useful, but at the end of the day, what really draws us to real estate investing, in my opinion, is the ability to have a high return on time. And that's what I'm really focused on these days as an investor. And I would encourage anyone else that's in real estate investing to start viewing things through that lens. And so one of the best examples I can give is wholesaling real estate. Here in Canada, it's still a relatively new concept. It's maybe only 5 years old that people have really been doing it to any serious capacity. And so it's got a little bit of a negative stigma still here in Canada. However, if you look at what you can accomplish with, say, wholesaling versus flipping a property, usually the return on time, even if the total profit is lower on that wholesale deal, let's say you could wholesale a deal for $10,000, or you could flip the same property and make $50,000. Well, the bigger question to me is how long does it take to wholesale, assign that piece of paper versus actually flipping it? Well, for the average person here in Canada, assigning it, you're probably going to assign it in 1 to 2 weeks. So your return on time, let's say it took you even a month. Well, your return on time is $10,000 per month. Whereas if we're going to flip the property, well, again, we have to tie up the property. We have to wait for it to close. Then we close on it. Then we have to do our renovations, fix it up. Then we have to put it up for sale. Then we have to sell it. Then we have to wait for it to close. Well, oftentimes, even if you're going to make $50,000, that entire process from start to finish might be 5 or 6 months. Well, at that point in time, you're looking at a very similar return on time, but your perception of risk is higher as well, because with the wholesale deal, we make the money before ever even closing on the deal. While we're flipping, there's a speculative piece to it because we don't really know what's going to sell for until it sells. So for myself and a lot of the people that I'm trying to help level up as real estate investors these days, I really want them to focus on the highest return on time investments. And this is also really important because a lot of us, when we first get started as investors, a lot of us swing the hammers ourselves. We clean out the units ourselves. We paint the units ourselves. But oftentimes, those are the lowest value skills, right? Like you could probably find someone to pay $10, $15, $20 an hour to clean up or paint the unit. Whereas you as the investor would likely be better served going and finding the next deal or going and talking with your next private money partner and really building those relationships and setting yourself up to do more deals rather than trying to squeeze every deal for every penny. We're better off to go find more deals. So this idea of return on time is just really being cognizant and not getting distracted by one piece of the puzzle, but really looking at the puzzle as a whole when it comes to our investing and investment strategies.
Excellent. Thank you, Matt. Well, folks, go ahead and check out and subscribe to Matt's YouTube channel at YouTube /Matt McKeever. And that's MattMckeever. Matt, thank you so much for coming on the show today. I really enjoyed having you.
Thanks, Jay. Really appreciate it.
All right. There you have it, folks. Another show. I'm Jay Conner, the Private Money Authority, wishing you all the best. And here's to taking your real estate investing business to the next level. We'll see you on the next show. Bye for now.